Well, hi and welcome to another Pat training video. Now this video was brought about really as a response to some emails that I received this morning. Now I know a lot of you had an absolutely fantastic day, which is great. You see a big smile on my face. It's because I really do love it when I get these emails in and people have followed the rules, if you like, or followed the market maker's business model and have been able to really capitalise on that model and make profit, which is absolutely great. But of course you always get a few emails where people come through and they say they didn't quite get things, especially the new people when they're starting out. They didn't quite get it, or didn't quite get in at the right time, or perhaps didn't get out at the right time. And so I thought I'd go through this video because this was quite a special day, in so much that, well, not a special day, but I was actually talking to a Pat user who had actually been away from the software for a few months and decided to come back. And he came back, and as a result of coming back, we had a brief chat. I think we were talking probably 30-40 minutes over Skype, and I was talking him through basically how I saw the market and what was likely to happen. And then he actually then got in the market, traded that, and made his entire month's rental for everything within the one move, which was great. But really, let's get to the mechanics of this and go through how things rolled out and what's going on and what we're looking for every single day. Okay, now this is pretty much my interpretation of yesterday, which is the 2nd to the 11th. This is the euro against the dollar, and I've just drawn this in pretty much as the market looks on the chart, because it's not really important how the bars were formed or anything like that. I'm only looking at the actual content of the market, and this is the form of the market. Not really interested in that. I'm only really interested in the content. Now, I go on a lot about this on the DVDs, about form and content. Why? Because it's very, very important. The people who make money at trading the market, whether they know it or not, are actually trading the content of the market. They're trading the market maker's business model. Now let's look at what was going on here. Now I've drawn this dividing line in down here, which is the day dividing line. When I was actually talking to Michael at this point, the market was just about at this point here, where you can see. So it just sort of started to turn up. And incidentally, I've only just drawn it red and blue just to graphically differentiate between the two. But that's not necessarily meaning the market's going down or up, as it were. But okay, so we had this point here. We was talking about this area here, and I said to him, what do you think is going to happen like at this point here? And he said, well, likely that the market's going to go up. And we can see obviously that's what happened on there. But I actually said to him, absolutely not. Do not do anything at this stage here. This market is not going to go up at this stage yet because certain things have not taken place. Now, the key areas that we're particularly interested in is obviously, well, we want to know three things. We want to know when the market makers are going into accumulation. We want to know what they're accumulating, because that's the key thing. If we can discover what's in the box, what are they accumulating, we will make money by default. And that's what the training is about, teaching you how to make money by default, as opposed to working out patterns and candles and all that sort of thing. Okay, so the reason I said to this, wait and hold on here, because this area going through here, you can see this area through here, this box-like area on there, was obviously the market was in sort of what people would term as congestion. There is no such thing as congestion. That's just a nice little trading tourism. People name that thing because it looks like congestion. Congestion is a word that doesn't tell you anything, and it doesn't really give you any insight into the market whatsoever. What's really going on through these periods like this is accumulation. Now, one thing that Michael was not quite aware of, or didn't fully understand, I said to him, as the market was coming down here, and then the market retraced back up here, what about this area that was coming down? So this area running through here, what about that area there? Remember, we couldn't actually see any of that. So none of this existed. We're only up to this point here. I'll just draw a little line on there. So we were pretty much at that point there. Nothing else existed beyond that. So this wasn't hindsight saying after this had occurred. So I said, what about this area through here? Well, he said, we can see the market was coming down. And actually the Pat software at this point was showing some very nice red intent blocks, which was showing us that the intent of the market was being pushed off down. Now I said, okay, well, if this market, as a result of this market doing this here, what must we know about this period through here? And he paused for a moment, and I thought about it, and then we discussed it, and I said, okay, coming down through that period was also an area of accumulation. And he said, I didn't really understand. He said, I thought that accumulation had to be within this tight sort of this band, and he used the word congestion. As I say, congestion is not really what's going on here. I said, no, because when we see something like this and see the market move away from this area here, we have to draw the conclusion that this could possibly be an accumulation of buys. If it was accumulation of sells, we wouldn't really see the market sort of rise back from this point here. Now, very, very important here that you do not get caught up on this as a pattern. No such thing as an M, a W, all this sort of stuff. This is nonsense. Do not get caught up onto patterns on charts. If you do, you're trading with a 95% and you're going to lose money over time. We need to get behind that, what's going on. So through here, if we can work out that the market makers through this period coming down here, incidentally, where every indicator is pointing down, all your moving averages are going down, all your MACDs, everything else is pointing down at this stage. So the masses of traders are there looking to sell this market, but the market doesn't. As it comes and it starts to lift back up. Why is this? Because the market makers through this period here, as the outside traders are coming in and selling this market, as I say, with all their indicators pointing down, market makers are accumulating, and this is sort of a bit of a throttle off, if you like. It's like a bit like you know, driving along, you're pushing on the accelerator on the car, you take off, but the car can accelerate on and sort of then go part way up the hill without. It's because the residual energy coming from that downward move. And this is exactly what we've got through this period here. Okay, so we're then at this period here. I'm sorry if I'm talking a bit fast, but I'm trying to keep this a little bit condensed version, so keep it nice and small for the web. And so when we got this point here, I said, okay, what we're actually looking for is a confirmation that this area here is an accumulation of buys. That's all we need. We don't need to look at bars. All we need to do is ask the question, what's in the box? What's in that accumulation area? Because if that's an accumulation of buys, this market is going one way and one way only. It's going up, okay? That's the default move that I talk about on the DVDs. Okay, so I said what we want to look for is that this area here, because as some traders bought through here, I said to him, where will these traders put their stops? Traders are very, very predictable. Where are they going to put their stops? So he said, clear enough. He said, they're going to put the stops down here. I said, exactly. Okay, so now we have to ask the question, if the market makers have been accumulating buy orders through this area through here, what will happen when the market goes through this stop area down here? And he said, well, clearly that will trigger the sell stops. And so the market will go down. No. Sell stops are triggered. What's the other side of the sell stop? The other side of the sell stop is the buy order. What happens is the market makers, as the sell stops are triggered, buy these, giving them added value to already the buys they've bought on this drop through here, and then the market gets in to its up move and away the market goes. It's then into its profit release, and that is why, as a result of this area here and that activity, that actual stock taking of there, that gives us the contents of the accumulation. You're looking for this. If you're looking to trade stops like this, you're going to lose money. Why? Because you're not focusing back onto the contents of the box. What is the market maker accumulating? Incidentally, we saw exactly the same thing at this area here. Market then went up, went through its profit release phase. Once the market makers have sold everything back into the rise, released their profits, they're then looking to set the whole process up again. And what we actually saw at the top here was some more stock taking, which actually came all the way from this point here. The market broke up above that, that was about there, broke up into there. So after the market had gone through an accumulation here of, in this case, sell orders. Why sell orders? We didn't know this was going to sell orders at this stage. We had no inclination about this at all. It's no good just guessing this. You can't guess this business. What happened is accumulation of sell orders through here. We didn't know that until the market went up, poked out here, took out the stops on here, and then the market gets into down again. Incidentally, I think it was about 180 up and about a 180 down, something like that. But what's important to understand here is how this market gets back into this phase and then gives this stop outs. Like I say, if you're just trading for the stop outs, you're looking for this, or you're looking for a bar to say, oh, that bar took out the stops, you're going to lose money because you're not focusing back on the contents of what is actually going on through this area here. Okay, well, it's gone on a little bit long, this video, as they tend to do. I get a little bit animated when I'm talking about trading. I hope you enjoy this. Hope you found this useful. I'm going to be doing a lot more of these now that we've got this sort of whiteboard set up and we're all like this. So catch up with you very soon. Have a truly great day.